So hello everyone, welcome back to the channel, and we are again today going to do Companies Act questions, that is most important questions, and the number of questions we are going to discuss in today's class will be 10, right? So let's start this session, and first of all I want to just tell you that we have already done two parts of it, isn't it? And today we are going to have our third part, and in this part as well we are going to discuss 10 most important MCQs. Okay? So let's directly jump to the first question, and this question says, and you have to participate in each and every question, and what will be the approach of study in the Companies Act or in the company law? You have to remember the facts, you have to remember the provision or clauses. So even if you don't know the answer of the question, you have to intelligently guess it, and as we are going to move ahead with each and every question, you are going to remember the facts and the provisions with each passing question. This is the purpose of yours to attend this class. Okay? Everyone is ready? Okay. So the first question we have is, as per section 30 of the Companies Act 2013, where an advertisement of any prospectus of a company is published, it shall be necessary to specify therein the contents of its memorandum as regards to what? So question is asking you कि as per section 30, when there is an advertisement for the prospectus the company issue to raise fund, right? Like in the case of IPO, in the case of FPO, they issue prospectus. So it is saying what it should include: the amount of share capital of the company. B option says the liability of the members. C option says the names of the signatories to the memorandum. D option says all of the above, and E option says both A and B. So the correct option would be option number D, and let me check in the chat section. Yes. So most of you are correct. That's very good. So let's read out the section 30 of the Companies Act in detail. It says that it shall be necessary to specify certain things, and that includes the object. Object means the business activities that the business is going to have, right? That needs to be mentioned in the advertisement of any prospectus, right? Now, second thing, the liabilities of the members and the total share capital of the company as well, that needs to be mentioned here. Other thing is that the names of the signatories of the memorandum should be mentioned, and the number of shares that has been subscribed by the signatories, and the capital structure. Capital structure means कि right now what is the percentage of share capital and what is the percentage of debt we have. That is called share capital, right? Okay. Now let's move to the second question, and it says, which of the following is true? First option says section 161 of the Companies Act 2013 deals with the appointment of additional, alternate and the nominee director. It is absolutely correct, and we have done this multiple times. Section 161 deals with the appointment of additional, alternate and the nominee director. Second statement says as per section 33 of the Companies Act 2013, every form of application should be accompanied by the abridged prospectus. This is also absolutely correct, but let me first discuss with you what is this abridged prospectus. See, this abridged prospectus is like the crash course, you can say. Means only the just like the crash course in which we only talk about exam related content, this abridged prospectus is only going to have the important features of the prospectus, only the main features of the prospectus that are relevant for the potential investors, right? So the full prospectus is heavy and bulky, but the abridged prospectus is going to have only salient feature, only the important features, and it is to be accompanied with application form. So yes, this statement number 2 is also correct. Now third option says red herring prospectus uses book building process. So this statement is also correct. Why? See, what is red herring prospectus? Red herring prospectus is that prospectus in which the quantum of the share that we are going to offer to the public is not going to be mentioned, plus the price is also not going to be mentioned. That is called red herring prospectus. So basically what company do, we are a company, if we have to raise the capital from the public itself, so what we are going to do, we don't know ki what should be the price of our per share, and we also don't know ki what is the quantum of shares that are going to be subscribed by the public. So what do? We try to build a process in which we are going to observe ki at which price these potential investors are bidding for our shares. So this is called book building process. We are going to maintain a book, and then we are going to see at which price we are going to allot the shares, or we are going to give them shares, right? So this is called book building process. So red herring prospectus uses book building. That is absolutely correct. So second option would the answer of second question would be first statement is true, second is true, third is true. So all these statements are true. So I can see the answers as well. Okay, so the answer would be option number D. Now let's come to the question number 3. It says ABC Limited is a public company. Okay, we are talking about the public company. Has 3 directors having paid up share capital of 20 crores. Now the question says, what shall be the minimum number of independent directors in a company? So we know that in every company, in every public company, 1/3 of the directors, right, must be independent directors. But this is a trick question. So if we go by the Companies Act 2013, answer should be 1. But you have certain rules as well. Another rules as well. That what that says, let's read it out first of all. So the rule is Companies Rules 2014 for the appointment and the qualification of directors. It has certain other provision. It says following class or classes of the companies shall have at least 2 directors. Which class of company? The public company as per the last date of latest audited financial statement, whose paid up share capital is equal to or more than 10 crores. And the question is saying what? The company has a share capital of 20 crores. So you have to remember these provisions, isn't it? So as per the Companies Act 2013, yes, 1/3, at least 1/3 of directors should be independent director. Yes, as per the section number 149. Now you have some other rule as well, and rules are basically more detailed form of the you can say act. It can't supersedes the act obviously, but in the Companies Act it is written. In every act it is written ki if some other rule has been prescribed by the government, okay, that will be applicable. So it says, the rule says ki public company as per the last date of latest audited financial statements, whose paid up share capital is equal to or greater than 10 crores, or suppose the company has the turnover of equal to or greater than 100 crores, or outstanding loan, debenture and deposit is greater than or equal to 50 crores. So in these 3 cases, in any of these 3 cases, when it is happening in a company, then that public company should have at least 2 directors. It is clearly stating that. So you need to remember these provisions. Okay, okay, clear? Now let's come to the question number 4th. Okay, third question, yeah, I got answers from few of you, and yes, question number 4 says, as per section 153 of Companies Act 2013, every individual that wants to be appointed as a director of a company shall make an application for the allotment of DIN to the central government using the form number. It is just asking you the form number, and I started to get the answers. Don't worry if you are wrong or right, because in the Companies Act, with every question you need to remember the fact. That is why you are here, isn't it? So the form that we generally use, it is DIR 3. So the option number D is correct answer here. Okay, DIR 3. Okay, that was the easy question. Now let's come to the question number 5th. It says, which of the following is true? Look at the question very carefully, because you have 3 statements. Okay, everyone. As per section 160 of Companies Act 2013, a person by himself with a minimum of 14 days before meeting has to leave a notice regarding what? Notice regarding the appointment as a director of himself, signifying his candidature as a director along with a deposit of 5 lakh rupees or more that has been prescribed. So second statement says, an independent director shall hold the office for a term of up to, remember this fact, up to 5 consecutive years on the board of the company. It is absolutely correct. Second statement is correct. Let's read out the third statement as well. Again, as per section 160, a person by himself with a minimum of 14 days before the meeting in which his candidature is going to be decided should leave a notice signifying his candidature as a director along with a deposit of 1 lakh rupees or more. See, statement number 1 and statement number 3 are almost same, but with the only difference of the amount. That is, if someone wants to be a director, he needs to leave a notice with a minimum of 14 days before the meeting along with 5 lakh rupees or 1 lakh rupees. So the correct answer is 1 lakh rupees. So statement number 3 is correct, statement number 2 is correct, but 1 is incorrect because it is written 5 lakh rupees. So your correct option would be 2 and 3, that is your option number D. So that's how you attempt the question in the examination. So option number D would be correct, and yes, few of you are correct as well. Okay, very good. Chalo. Even if you don't know the answer, just guess it intelligently and try to remember the facts. Okay? Chalo. Let's come to the question number 6. It says PQR Limited make payment in excess of 11%. Oh, so basically what happens in the Companies Act, it is prescribed that out of net profit you should pay the managerial remuneration up to 11% of the net profit, up to 11% of the net profit. It is written in the Companies Act 2013, okay, as per 197 section. But it says, suppose a company makes a payment in excess of 11% of the net profit as managerial remuneration. Which of the following authorization is required as per 197 of the Companies Act 2013? Which authorization is required? Ordinary resolution and prior approval of the central government? No. See, the resolution required is special resolution. So just look at the answer. Where is the answer? D. Option number D is the correct answer here. See, there was an amendment, I think it's 2019 or 18. Before that, you need to have a approval from the central government as well, but now it is not there. So you only need to pass special resolution to make payment in excess of 11%. So now this 11% becomes very, very important from the examination point of view. See, I have framed this another question, ki special resolution is needed or ordinary resolution is needed. But the question can ask you in the examination, ki tell us the percentage criteria as per 197 of 197 section of Companies Act 2013. Up to which percent of net profit can be paid to the can be paid as the managerial remuneration, right? So the answer would be 11%, but they can pay in excess of 11% by passing the special resolution. That is also correct. Okay, done everyone? Chalo, let's move ahead. Okay, we have discussed this thing, right? Ki if you want to exceed this 11%, that is to be authorized in the general meeting. Okay. Question number 7. Look at the question very carefully. It says, as per section 423 of the Companies Act 2013, any person aggrieved by important, very, why I am saying this is important, again the case of appellate tribunal, right? This is the important section. 420 after 420 sections, this become important from the examination point of view. 1 or 2 question you might be seeing definitely in the examination from this chapter itself, right? From the National Company Law Tribunal and National Company Law Appellate Tribunal. So it says, if any person is aggrieved by any order of the Appellate Tribunal, not by the tribunal. See, one is NCLT, another one is NCLAT, that is Appellate Tribunal. So if any party is aggrieved by the order of Appellate Tribunal, in how many days? No, days is given to you. It says to whom it should file its appeal against the order of Appellate Tribunal within 60 days from the date of receipt of the order of the Appellate Tribunal. See, so okay, let me check first of all. Option E, Narendra Modi, someone is saying no. See, I have just made this option just to make it just to make it class interactive. Okay? So obviously you need to eliminate the options. Okay? So district court, no. So see, Appellate Tribunal, there is you can say if someone has been ordered by the Appellate Tribunal, that is National Company Law Appellate Tribunal, district court can do nothing, isn't it? Yeah, central government, High Court is also not required to take up the cases that we are appealing against the National Company Law Appellate Tribunal. Central government can't take this. Narendra Modi, that is Mr. Narendra Modi, that is the Honorable Prime Minister, he can't take it. So what option we are left with? Supreme Court. So the answer would be Supreme Court. Namaste everyone. Okay? So the answer would be Supreme Court. But the question could be asked like this as well. Ki within 60 days, see, remember the days as well. Okay. So you need to remember the 60 days criteria. And one more question I want to ask you right now. Suppose the National Company Law Tribunal, suppose an order has been passed by the National Company Law Tribunal. So in how many days you can appeal against the order of the National Company Law Tribunal to the Appellate Tribunal? In how many days? See, to appeal against the order of Appellate Tribunal, you have a time of 60 days. But to appeal against the order of National Company Law Tribunal to the Appellate Tribunal, how many days of window is given to you? Tell me. Yeah, very good. Always be kind. 45. That's very good. So 45 window is given to you. Okay. Very good, Nilesh, and always be kind. Okay, chalo. Let's move ahead. Question number 8 says, as per section 124 of the Companies Act 2013, where a dividend has been declared by the company, important again, see, few topics are very important, like your prospectus and allotment of security, that is chapter 3rd, right? NCLT, NCLAT. Now this one, that is your dividend, the chapter that is related to the dividend. It says where a dividend has been declared by the company but has not been paid or claimed within 30 days. So important. This time period of 30 days is also important. From the date of declaration of any shareholder entitled to the payment of dividend, the company shall within 7 days from the closure of 30 days. So in 30 days company has to pay dividend. But if it doesn't, or if the dividend has not been claimed by the investor, then within 7 days of this closure of 30 days, within 7 days, they have to transfer it to a certain account, So the question is saying, ki, what do we call that account? So I have started to get the answers, right? So capital redemption reserve account, no. Reserve capital account, no. Share capital account, no. Unpaid dividend account, yes, absolutely. So the correct option would be option number D, and most of you are correct. Very good. But again, I'm going to ask you one more question. So tell me, after transferring this amount to this unpaid dividend account, if the amount has not been claimed by the investor, in how many years, within how many years, so that you have to transfer it to which fund? Give me the answer of these two questions. If you have transferred this dividend amount to the unpaid dividend account, right? So suppose, so I have started to get the answer. This is very important question. So within 7 years, if that amount remains unclaimed or unpaid, you have to transfer that amount to which fund? Now tell me the name of the fund. Yeah, very, very good. IEPF, that is Investor Education and the Protection Fund, right? Very, very good. We have to transfer it to the IEPF. That's very good. Chalo. So these are the important questions. All together, we have discussed all the important questions with relation to the section number 124. Okay? So question could be asked from this particular slide itself. 7 years, IEPF, 30 days, 7 days, and the unpaid dividend account. A question can be asked from this particular slide in the phase 1, right? Okay. Now, question number 9 says, as per section 123(1) of the Companies Act 2013, what do you have? Before declaration of any dividend in any financial year. Oh, easy question. This is the accounts question, I think. Before declaration of any dividend in any financial year, company is required to transfer what amount to the reserve? 10% of the profit for the financial year to the reserve of the company, 20% of the profit of the financial year to the reserve of the company, such percentage of its profit that it may consider appropriate to transfer. Obviously, C is the correct answer, and that is very easy question. There is no provision which says ki you have to transfer this much percentage of your profit to the net reserve. So whatever company thinks ki it is appropriate to transfer it to the reserve, he is going to do that. He or she is going to do that, right? Okay, very, very good. So option number C would be the correct answer here. Very easy question. Now, let's talk about the question number 10. It says, as per section 128 of the Companies Act 2013, books of account should be made on dash basis and according to double entry system of accounting. Again, a very easy question. Tell me the answer of this question. This is very easy, huh? The answer of 10th question. So what should be the answer of this question? Cash basis? No. Accrual basis? Yes. So most of you are correct here. Very, very good. So very easy question. Key books of account should be made on the accrual basis. Now, this question you have to give me the answer in the comment section. Okay, everyone. Now it says XYZ Limited did not prepare its balance sheet as on 31st March 2019. Okay, and that is your balance sheet as well and PL as well. Okay, and he did not prepare this balance sheet or financial statement, I can say, in conformity with the accounting standards that has been stated under section 133. Why I have come up with this question? Because this section is also important. 133, section 133 is important because it compels companies to apply the accounting standard. But this company didn't comply this section 133, and it did not prepare its financial statement in conformity with the accounting standards, right? So in such a situation, what disclosure to be made in the financial statement, okay, by the company? The deviation from the accounting standard, the reason for such deviation, the financial effect, if any, arising due to such deviation, all of the above or none of the above. You have to give me this answer, not in the chat section. After this class, you have to give me in the comment section so that I can write it there. Ki you are correct and you are incorrect. I will write it there, not here. Okay? Chalo. That's all for today's class. We are going to meet again tomorrow, same time, 4 p.m. तब तक के लिए टाटा बाय बाय. Thank you everyone and take care.